Hello everyone, welcome back to my channel. Let's look at what happened in the markets today. Welcome to Post-Market Report by Akash Bacha, SEBI registered research analyst and founder at Wealth Origin. Today's trading session turned negative for Indian markets, and after a few strong days, we finally saw some clear signs of profit booking and an exhaustion at higher levels. In this video, let's break down everything that happened in an easy and understandable way. Nifty 50 closed the day around 26,030, falling by roughly 143 points, which is about 0.5%. From the morning itself, the market was struggling to hold on to the positive territory because banking and financial stocks remained under pressure. Since these stocks carry a heavy weight in the index, even a slight fall tends to drag the overall market down. What was more telling today was the market breadth. Only about 14 stocks from Nifty 50 managed to close in green, while nearly 35 stocks ended in red. This clearly shows that the weakness was not restricted to just a few names. The selling was broad and seen across all the sectors. Even mid caps and small caps, which have been strong recently, participated in the decline as traders booked profits after recent highs. Now, let's talk about institutional flows. Foreign investors, FIIs, sold aggressively today. They were net sellers to the tune of 3,285 crores. This is a strong selling number and clearly reflects caution among global investors. On the other hand, domestic institutional investors stepped in with buying worth 4,343 crores. DIIs have been consistently supporting the markets during correction, and today was another example where domestic flows tried to balance out the negativity coming from FIIs. But despite that support, the selling pressure was so strong enough to pull the index lower. Now, let us look at the stock-specific moves. Balkrishna Industries was among the standout performers of the day with a gain of over 6%. Birlasoft also moved higher by about 5%, showing strong buying interest. On the losing side, Garden Reach Shipbuilders corrected sharply by more than 4%, followed closely by Welspun Living and Saregama India, which also dropped noticeably. Most of these declines seem to come from a profit booking after a strong rally over the past few weeks. In terms of a news flow, one of the major themes affecting the market today was the weakness in global sentiment. Concerns about interest rate decisions, along with the caution around inflation numbers expected later this week, kept foreign investors on the sidelines. The Indian rupee also weakened, which typically adds to FII selling pressure since it affects returns when funds are repatriated. Another significant factor was the correction in banking stocks. Even a small dip in heavyweights like ICICI Bank creates a ripple effect on the entire index. And that's exactly what we saw today. After markets hit fresh highs recently, many traders simply used the opportunity to lock in profits, which added the downtrend pressure. So, what does this mean for tomorrow? The key thing to watch will be FII's flows. If selling continues at the same pace, the market may remain volatile. Also, pay close attention to banking stocks because any stability in that space can help Nifty find a base. The support zone around 25,900 to 25,950 remains important. If global cues improve, we could see some recovery. Otherwise, expect a cautious start. That's the complete breakdown for today's market action. If you like this style of analysis, stay tuned for tomorrow's pre-market report. Until then, trade safe, stay disciplined, and I'll see you in the next video. Thank you very much.